Just stop it. The run-of-the-mill, cheesy, humdrum bullshit status quo just tires me out. What fascinates me are the industry disruptors, the superhuman frontiersmen or women who go through hell to achieve their goals. Join me as we meet and learn from those mavericks, rebels, and business leaders that aren't afraid to piss off the establishment in order to make radical change for good. Sponsored by Johto PR, the disruptive anti-PR firm that murders your competition with cinder blocks and cyanide. This is Disruption Interruption. Welcome back, everybody, to Disruption Interruption. I'm your host, KJ, and we're here today to talk to another industry leader that has steered off the lame, tired path of the status quo. We have been told that fundamental research is dead and that you should probably just follow the herd into index funds. I say that's a load of BS. And our guest today is a guy who spent years in the trenches of Wall Street and realized the system was rigged. He didn't just walk away, he built a robo-analyst to fix it. He's using machine learning and natural language processing to do what humans simply can't. Read every single word and every single footnote of every corporate filing. He isn't just gathering data, he's correcting it. He's stripping away the accounting distortions to find what he calls economic earnings. He's disrupting the fundamental research status quo. While legacy providers are still scratching the surface, his technology is diving into the danger zone to show what's really happening behind the scenes. And the proof is in the pudding. His AI-driven strategies outperformed the S&P 500 by 900 basis points in 2023 alone. I can't wait to hear what's happened after that. We're diving into why your favorite stock might be a ticking time bomb, how robo-analysts are making human analysts look like amateurs, and why the next revolution and evolution in investing isn't about more data, it's about better truth. Please welcome our disruptor, the CEO of New Constructs, David Traynor.
Thank you, KJ. It's great to be with you.
Yes, thank you. I
have a quick note, though.
Please.
The performance of the index driven by our data, that beating by 900 basis points, that was in last year. That was 2025, not 2023.
2025. Thank you so much. Okay, good. Great.
Noted. So it's recent. This is fresh. This is real.
Super recent. Okay, great. Awesome. Thank you for that. So I want to dive into this because, oh my gosh, this is like the cat's meow, the Knee Plus Ultra, like the elixir that everyone is looking for. Before we get into the solution, I really want to unpack what's been the status quo, the problems, but even before that, our audience always has asked, for you personally, right? What's driven you towards innovation in your career or disruptive innovation?
Well, I got a real taste for how Wall Street worked because I was at Credit Suisse during the tech bubble and before, during, and after. And before the tech bubble, I was working on a similar project. We were bringing a better measure of earnings to market. When the tech bubble hit and Fred Quattrone joined Credit Suisse, all that work that I'd been doing was really pretty quickly brushed aside in favor of doing more deals. And what I found out was that doing deals on Wall Street was not about really serving the capital markets. It was about how to make those bankers big bucks right now. So I had meetings with people. They'd say, oh yeah, we can't use your model, David, and show true earnings because we don't show our clients the true earnings number. We have two sets of numbers. We have a number we show the retail world, and then we have a number we show the institutional world. And the retail world number is low because, hey, you know what? Stocks go up when companies beat the number. So we have a really low number out there. But that low number doesn't reflect our real belief in the profitability of the business, which we keep private for our institutions.
That's fascinating.
Fast forward a couple more months, and you've got the whole Elliott Spitzer settlement when they blew up all the folks across Wall Street. But at the worst was Credit Suisse, because the people at Credit Suisse were publishing reports to the world saying, oh, this is the greatest IPO, you should buy it. And then sending an email in the next breath to a friend saying, I can't believe anybody is stupid enough to invest in this piece of blank.
Wow.
So I was early in my career and I thought to myself, oh my goodness, if we can't trust the Wall Street analysts to read the filings, to do this work, who can we trust? And if we can't trust the integrity of our capital markets, then perhaps the United States loses the single biggest advantage that it has had as a country since our inception. You think about how we have gone from newcomer to the world stage 225, 250 years ago to the most powerful country in the world. It wasn't because we discovered some new, magical, kryptonite or something, right? We did more with less. We were able to allocate and find higher returns and have greater levels of innovation because Just like freedom of ideas, freedom of capital to flow to where it would earn its highest return is a staple of our country. It's our capital markets. KJ, my point is the capital markets are maybe the most important asset we have, and the integrity of those capital markets are essential to maintaining their future. You hurt the integrity of the capital markets, you lose trust. All these investors pull their capital out. Where are we, right?
You here was were you pissed off? Were you like, this has got to be better? We've got to do something about it. I mean, you're looking at long-term survival concepts here. And when you're talking about we're losing our biggest advantage as a country. What was it that like,
I thought I could do it, and I
yeah,
thought it was very hard to do, and then I thought I could make a lot of money. I
okay, I
thought to
love it.
myself, and look, I've got family that's been in the service, and I have tons of respect for folks who serve in the military, but it wasn't for me. And I thought, well, this is a way for me to serve my country, and it's kind of a win-win. Like, look, I can make money making the system better. Isn't that what America's about? If
100%.
I'm trying to do this in communist countries, I think I'd end up with a pair of concrete shoes pretty quick.
Yeah.
Right? That's what I used to joke with people
I
about,
think
right?
you're so
So
true.
if I can go start a business that can make money making the system better, that's a great way to serve my country. And also new, AJ, because I did this work for so long on Wall Street. And I went around the world talking to different analysts. Not many people knew how to do what I was doing. Almost
Like, David,
nobody.
this is so interesting to me. Like, first of all, I'd like to acknowledge you for your like sense of duty. But secondly, let's go back. You're talking about these Wall Street analysts, right? Like, and because you mentioned that, I'm like, how do they get away with not being ethical like that? Like how, like because there's no law that says you can communicate to the retail much lower than you can to the institutions. Like I hate to always put law and bureaucracy in it, but how do they get away with that?
Well, what is unethical is not always unlawful on Wall Street.
Right.
Have you ever heard of regulation fair disclosure? That's a law, and this is the answer to your question, KJ.
Okay.
Regulation fair disclosure is a law that says that a company has to disclose important information, any material information, to everybody at the same time, not just to your Wall Street buddies. Guess when that law went into effect?
2025.
The year 2000. So
Okay.
right after the tech
Wow.
bubble, right after the tech bubble. Up until that point, it was legal for companies to call up their buddy at Credit Suisse and say, hey, by the way, we're going to beat the quarterly number by a nickel next week. I love you. Bye. And then the common practice was because the sell side or the Wall Street firms tended to have the relationships with the companies. So then the analyst at Credit Suisse would in turn call his institutional money management clients and say, hey, by the way, I just heard they're going to beat the number by a nickel. That was legal all through the tech bubble until 2000. So if you can imagine that was a legal practice, then think about how many unethical things are going on Wall Street. It's literally legal to be able to front run clients. It's still legal today for people to front run order flow. I mean, the millions of dollars that Schwab and other firms like Robinhood, millions, make by selling the orders of their clients to big Wall Street firms before those orders get filled, so that the big Wall Street firms can hoover in all this order flow data and know what the market's going to do before it does it. That's legal. That's how Citadel makes a ton of their money.
Is it legal now still?
Order flow is
Wow.
legal. The,
Just
the,
have like a whole system that's like figuring out how to game the system. I'm listening to you, David, and I go, people may not know this, but in the court of public opinion, Wall Street does not have a good reputation. And
it would be a
people,
lot worse. It'd be a lot worse, KJ, if they really knew how bad it was.
no, you're exactly right. I think people think that there's a lot of opportunity to be had there, but the information is held by an esoteric few that people aren't going to get the information that they need. So there's an allure to it. How can we get this information? But public opinion is very negative on Wall Street. And it's because of situations like this and activities like this. It does create that animosity.
It's deserved and it's earned. I mean, think
Yes.
about over the years, all these busts and how many bad stocks that Wall Street constantly rolls out. Here's an interesting stat. Guess what? Of all the companies that Wall Street analysts cover, what percentage of those stocks do you think have a buy rating?
10%,
50.
50.
Guess what percentage have a buy or hold rating?
I have no idea.
96.
And so what does that mean? Like a buy or hold rating or a
It
buy or
means
yeah.
about
60% is buy. And what's the buy and hold?
96.
Really?
So about 4% get a sell rating. So I make that point to help people understand that Wall Street is in the business of selling stock. Expecting
No.
Wall Street to talk bad about a stock is like expecting a car salesman to talk bad about their cars. And
Wow.
that's a conflict of interest that's been in place forever. And the Wall Street analysts, the research analysts that I was talking to and mentioning, and that people hear, like Dan Ives, those guys, guess how much money the Wall Street analysts, the people who do research, guess how much money they make for the firm every year?
Like percentage wise or dollar
Yeah,
wise?
just percentage of the profits of Goldman Sachs. What are the sell side research analysts?
80%.
Zero.
Oh, they make zero?
They don't make
Oh my God,
money.
I am so clueless on this. This is
Well,
amazing. Most people are, yes?
most people don't know this, right? Because
Okay, tell me what that really means. What is the ramifications of that? Like in real world, like how would I be able to see that manifest?
yeah, so you go look at the financial reports from Goldman Sachs and you see that their money comes from investment banking, transactions, and trading.
Yeah.
Nothing about research. The role of the research analyst is to facilitate relationships with corporations so that they will do their investment banking and trading and transactions with Goldman Sachs and the
What does that
others.
mean for the average investor?
That means that when you hear a Wall Street analyst, you need to understand that that analyst is paid by a banker to say good things about companies, because if that analyst does not help the banker have a better relationship with the corporate client, that analyst serves no purpose.
Okay, this is such an irony of planet Earth, right? I mean, this is what, this is what big pharma does. This is what big food does. This is what big agriculture, you're talking about big finance.
Yes.
Wow.
Yes. It's the same. It really is the same or a similar game. One of my good friends on Wall Street, a guy named Mike Mayo, probably one of the best bank analysts of all time, sell side guy. I mean, I was there. I worked for him and I saw him get fired because he wasn't bullish enough about the banks for
Hmm.
the investment bankers. He was and has been one of the top highest rated stock pickers and analysts for the banking industry for 30 years.
What happened?
They fired him and he went to another firm.
Got it. And they fired him because he wasn't bullish enough.
Correct.
But he was keeping his integrity in.
Correct.
Wow.
And you can look it up. Mike Mayo, Credit Suisse, Prudential Securities, I think is the firm that hired him. The story's still out there on the internet.
I am going to look that up. I'm sure our audience will too. Okay, David Trainer, what is the solution to this? When you looked at this and you said, okay, long term, this is not good for our capital markets, for our country. What's the solution? What is the technology? Why did you do this?
The solution is to create a technology that is going to do the work that expert humans can do in these filings to build models that provide the truth about profitability and valuation. And I would say that today it is more important than ever. Because if you think about Anthropic and the news here recently, KJ, about how they're dropping their altruistic intentions and goals to keep AI from becoming evil or whatever, and doing bad things. Look, in my opinion, the mission of New Construct was always to support the integrity of the capital markets. And we would do that by making available to all investors the truth about profitability and valuation so that they would not be as susceptible to the misinformation from Wall Street as they would be otherwise.
Amen. And this is a new information age of truth. Truth is so powerful. Yes.
And I think we need it more than ever because, listen, the first thing I think a malevolent AI might want to do is accrue resources for itself. What better, faster way to do that than by manipulating the stock market?
Right.
And when the market is already as manipulated as it is, I think it's prime pickings for an AI. I think the best defense for that is for the truth to be fully and totally disseminated to all the equity market participants, especially retail, so that
Yeah.
they can't be bamboozled. The AI can't corner the market if people know, wait a second, that's not true about this company.
That's fantastic.
So not only would we ensure the integrity of our capital markets, we can protect it, I think, from takeover from bad actors. Because guess what, right? We already have big bad actors that are effectively controlling the market via Wall Street. All the AI's got to do is consolidate that power. So
Right.
again, I think it's important for the truth to be out there. And that's what New Construct is here to produce. And we're really, really excited to see that the truth still seems to really matter.
It does. It absolutely does. Okay, David, who are you pissing off by doing this?
Just about everybody on Wall Street.
That's good
You know,
though.
I mean, it's funny, like these people make so much money that I don't know if they even care that much. They're just like, because I saw this at Credit Suisse too, I had a front row seat. It's like, I'm going to make so much money in the next few years. It doesn't matter what happens afterward. The market
It's
can
they don't, yeah, they lose all like sense of
totally.
reality.
I mean, yeah, I remember like the top bankers at Credit Suisse making hundreds of millions of dollars a year. I remember Credit Suisse was fine. I think the global research settlement after the tech bubble, led by the district attorney, a guy named Elliot Spitzer, doesn't have such a great reputation now, but his reputation was great when he got this settlement because the biggest ever is like $1.2 billion fine for Wall Street. I remember being in a meeting.
Like that's what he got?
No, that's what Wall Street was fined, $1.2
Oh,
billion,
okay.
and this was like 1999.
Wow.
It was a big number back then, right? It's like 25 years ago. Credit Suisse made that much in a week. They
Damn.
told me once, I remember being in a meeting once, and the global head of research said they made $200 million on the trading desk yesterday, just the trading desk on one of the recent IPOs. So the money is so big that they're just happy to hit it and run. So it's them, and then it's also the legacy data providers, the FactSets, the Bloombergs, the S&P Globals, the Moody's, the people that are sort of providing the surface level research all this time and all that data. And I've been in to talk to these guys. Same with the SEC. They get ticked off too, KJ. It's like, hey, I'm just trying to help you so that your people don't have to read. Like this is an average size annual report, below average.
Yeah, I know, right? It's like a bill. Like,
And it's not like it's comic book material, right?
no.
So,
Yeah, it's like 10 font and yeah, like lots of misunderstoods and jargon and things that, legal language and so forth. So, is it the fact that there's like a lot of bad actors, or is it that they have created this situation because they've been trying to solve a problem and then it became the problem?
yeah, I think so. I mean, my sense was that when I was on Wall Street, I could see that there were some really talented, smart folks who were really just could really create a lot of value. They
Yeah.
understood how companies worked. And I think being there before, during, and after the tech bubble, I could really see a difference in the kind of people that were sort of the new people versus the old people. The older folks, like I felt like they understood that there was a basic sense of stewardship that they felt to fulfill as because of the super powerful position they had in the capital markets and how much money
Mhm.
was being moved. And I think some new folks came along like, man, this guy's making a lot of money. This guy's making a lot of money. I want to make a lot of money. And you had a lot of these people coming in, and all I kind of cared about was making money. And so the sense of stewardship was lost.
And then you have the declining ethics and morals of our society. It's just like a perfect storm, right?
Exactly. And the money's so alluring and so big and so fast. F you money, 2 years and I'm out. Nassim Taleb wrote that great book, Fooled by Randomness. And he tells the story so well by that individual trader who's sitting there doing the right thing, doing the right thing. The guy next to him all of a sudden doubles his daily income, triples, quadruples. And he's sitting there, I'm doing the right thing. He's like, well, what is this guy doing? That's not so right. But now he's making 5 times what I make. Then it's 10 times. And then he goes and retires. And the guy's still, he's like, what am I doing? So I can just go do this for a little while and you know what I'm saying? Like it's a slippery
Yeah.
slope.
Yeah. What? Okay. I have so many questions. I want to talk to you forever about this. Well, what do you see happening in the next? I mean, technology is iterating so fast, right? You obviously have a purpose with new constructs. You obviously have a viewpoint of what you want the capital markets to operate as. Where do you see this going in the next few years? And what are you guys? You guys are going against a bunch of like headwinds. What do you want to accomplish?
Things are really strong and good for us here at New Constructs for two main reasons. Number one, we got the dramatic outperformance of all of the indices we have through Bloomberg, but in particular the core earnings leaders index was extremely strong in 2025, and that's proof that the market still cares about truth. And that means we've got some efficiency that is still strong in the market. And I think regardless of what the incumbents want to say or do about new constructs, investors have something they can hold on and they have an escape hatch. They can invest in things like that.
Good. Number
Number
two.
two, number two, Google Cloud chose us to build the first ever AI agent for investing. They chose us because they know our data is clean. And they wanted to show the art of the possible when you marry their top end technology with a really powerful data set.
Mm.
Because the one thing we don't see really anywhere yet in AI, KJ, is for AI to actually replicate the abilities of a subject matter expert.
Right. Oh, it's so true. David, that's so true.
It's
Wow.
it's like having a million or an infinite number of junior analysts and
Yeah.
secretaries. But like,
In
that's
many
not
industries, right? Yes.
correct. It's been super helpful for us. Like we've used it as like a mid-level marketing person, like put all this copy together. It's great. But, I think for these AI firms, the people spending billions and billions of dollars and CapEx on this, right? They're going to need to actually create an AI. It's going to do more than just, do your shopping for you. And that means they're going to have to really care about better data. My point being is that there's a big demand for what it is we do now. And the
Okay.
AI, I think, is helping us sort of do an end around the legacy players because people are starting to wake up and realize, oh, wait, this analysis I've been getting, not so great. I can kind of do it on my own. What I get from the internet is okay. When there's an AI, and we're going to be publishing this thing live in the next month, when there's an AI that can answer questions for you about what's the true profitability of this business. Which
Mm.
of these companies in my portfolio is most likely to miss earnings next quarter? What are the best stocks in the tech sector based on this rating system that New Constructs has that's proven to beat the market?
Yeah. Wow.
If you have an AI you can trust to answer really sophisticated questions, well, that's something.
Does your AI like have like prompt like give investors say they're not that educated on what questions to ask or what look for and so forth? Do you like prompt and help them with that?
We have a huge education section. That's always been a hallmark of what we do. Two major hallmarks of what I've always tried to do, KJ:
Great.
education and transparency.
Yeah.
So the reason Google chose us, the reason Bloomberg chose us, the reason Harvard Business School, Ernst and Young chose to work with us is because every single number that we have in our models, every adjustment, everything that I say is different can be audited back to the original filings.
Wow. David, you have a true duty to educate the markets on this via public opinion. You really do.
Well,
Wow.
thank you. Thank you, KJ.
Yeah.
And I appreciate you helping me with that because it's fun. It's good. I
Yeah,
don't
but
take for
there's a
granted.
lot of opposing forces and you need to put the truth out there continuously.
Yes.
Yeah.
That's right.
What's your biggest challenge?
Our biggest challenge is marketing. We're friends and family and owned firm. So, I've seen a lot of companies literally start after us and get a huge exit, before us because of marketing. I mean, they
Yeah, you
just
really need to be
spend
the biggest storyteller, don't you?
30 million, 30, 40 million bucks on marketing, get you, a 200, $300 million buyout. And it doesn't matter what the product is. And I'm kind of old school. I'm like, oh, if we build a really high quality product, then people will want it. And that's not the case. I mean, look at CNBC and all this stuff. People you said Wall Street doesn't have a great reputation. They are drinking down the Wall Street research as much as they ever have.
I know it's so true. The good thing though, I will tell you, because that is my industry, is that opposing forces, opposing views, and people that come in that are going against the status quo they are wanted by the media today because that is part of the media algorithm. So you have a David and Goliath situation today where someone like you can come in and call BS and you can get on those particular conversations. That's good for the regular people, right? I mean, it makes good news, but it's also an opportunity today. Who's your target audience? Who buys from you? Who needs you?
I would say everybody in the investing business.
Now,
So,
when you say that in the investing business, are you talking all the way down to retail consumers?
yes, we have products that sell for as little as $10 a month, $50 a month. And then we've got institutional clients, some of the biggest quant funds you've ever heard of, Goldman Sachs Asset Management, the big names, or they don't like us to mention always that they're clients. They like to keep that secret, but they're paying us $10,000, $15,000 a month.
Wow. Okay.
And so that's we have the ability because we sort of cracked the code. We can package it appropriately for all the different folks, but I feel like everybody should have access.
Yeah. No, I think that's great. Spoken like a true disruptor and innovator. Seriously. You fit the common denominators of people that have been on our show,
Thank
right?
you.
Making it accessible to an underserved market that's, had a pent-up demand, but also being able to scale it for a variety of publics so that they get access to it and get help. What are your growth goals?
Our growth goals are big. First of all, we want to grow our coverage universe because right now we only cover US stocks. We want to
Okay.
go global. And that's been a focus of ours for a while. We wanted to wait till our robo-analyst technology was fast enough. And we wanted to wait till we had the proof. And when we got the proof in terms of the performance of our index last year, all three indices, and we've also optimized the technology so that like about 98%, sometimes 100% of the filings can be automatically parsed and put into our engine. Like, okay, now it's time to scale this thing. So that's a huge growth. We want to increase our coverage from around 3,500 companies to 20,000 companies globally. That's a big deal. And then on the AI side, our AI agent insights, we've got 0 subscribers now. We'd like that to be, 100,000 by the end of the year.
Tell me a little bit about that.
It's just like any other AI chatbot, except that you can ask it questions specifically about investing. So this is what I mentioned when I said Google chose us to build an AI agent for investing. We called it FinSights, and they built it on our data, and they built it for us, and they built it.
Congratulations, by the way. That's
Thank
a
you. It
big
was a,
deal.
that
It's a
was
very big deal.
that was a very cool deal. Very cool
Yeah.
deal. That worked out really well for us because
Yeah.
they paid us and they built the product, and so it's like win-win. I'll take it. It was one of my goals last year to get an AI agent chatbot for us, and we got one. And the cool thing is that, like, when it comes to investing, you can come in and you can ask it questions and get real truth. For example, how much is Oracle overstating its earnings in 2025? How much off-balance sheet debt is Oracle hiding? Which are the best stocks in the tech sector? Which companies have the most off-balance sheet debt? Which stocks are most likely to beat the number next quarter or miss the number? And the beautiful thing about this AI is that it's all based on research that's proven to outperform the market by a lot.
Freaking love this. I love this. This is really the age of transparency, isn't it? You really can't hide anymore.
That's right. That's right. And I think that for people thinking about AI too, KJ, and like this recent article from Citrini about how it's going to take away all the white collar jobs, my message is if you go out and figure out how to do things that no one else can do, which is what I felt like I needed to do before I ever started a business, do something that no one else can do, what the heck am I doing? And I think that's what we've done with how we've taught a machine to read footnotes. Very few humans in the world know how to read a footnote at all. Almost no one knows how to do it at scale. So we took
Interesting.
20 years to teach a machine to do that. It's a very hard thing to do, but that's what it takes. And that's what I think I want to encourage people to do. It's going to be very different from what we're tempted to do all the time, which is to have short-term focus on reels and video games. Stop, dig in, focus for a long time, learn how to do something and understand something that other people cannot. And then you've got something special. And that's what New Constructs is built on as well, is like really focusing on difficult, complex legalese and financial jargon and scaling that up so that now we have a machine that can give people insights that are unrivaled and really unprecedented.
I absolutely love that. And I agree with you. I do believe in the human spirit. I feel that people will rise to the occasion. There is a lot of fear, uncertainty, and doubt, FUD being put out by AI and taking white collar jobs and so forth. But you know what? There's an indomitable spirit in most every one of us, and there will be a large number of people that will rise to the occasion and will do exactly what you said. But I love that for your message. Food for thought, everyone.
Thank you, KJ. Yeah, and I think honestly, we all crave authenticity. And I think that being authentically human and
Yeah.
reaching out to help and care is something the machines will not only never be able to replace, but I think that they will be curious about
Mm-hmm.
and always marvel at in humans. So I don't believe that machines are going to want to replace humans and pull the matrix and just turn us into energy creating bots or whatever. I think they're going to always be curious, and they're going to want to keep us around because there's a magic, there's a virtuoso effect. There are miracles, there are things that happen in human life that are unexplainable, and that's what makes things authentically human. And I think that's always going to be special.
It is so special. And I love that we're talking about this in relation to finance. It's awesome, isn't it?
All related, right? If you're doing the right things, it comes from the right place. These things should be related. They don't need to be segmented, I think, in so many ways that society wants to teach us. They want us to silo ourselves out. And I think, stewardship applies to everything. And I feel like stewardship is kind of a core of being a good human. Like, we need to do right by the resources we're given, whether
Yeah.
it's the talents we're born with, or it's the fruits of the land, or our friends and our family. Gratitude and stewardship, like if we keep that in the front of our mind, everyone's going to do a lot better. If we're looking to try to take advantage of people, then we're going to do a lot worse. And I think those are just general principles that create prosperity.
Yeah, it's true, right? Well, natural laws of life. David,
Right.
how do people
If
get
we
a
can all
hold
do
of
that.
you?
Say again.
How do people get a hold of you?
Newconstructs.com. That's the best way. I'm also we're on Twitter at New Constructs, LinkedIn. But yeah, we have plenty
David
of links.
Trainer, LinkedIn. Yes, we'll
David
have
Trainer, LinkedIn, correct.
all of this on the show notes.
Yeah, and then I'm on at the Real D Trainer 37. That's my Twitter handle. I had to do that. I do something funny for my kids. Couldn't just have
Yeah.
something boring. The Real D Train 37. That's funny. They still make fun of me for that.
They do.
Come on,
Okay,
bros.
that's awesome.
I gotta be hip in some way.
You do
Trying.
have to be hip in some way.
Yeah. Try something.
So speaking of being hip and being a dad, what do you do in your copious free time?
I spend a lot of time with my family. That's really tops for me. I feel like I get a lot of strength from their support and their happiness, and I want to make sure I get that part right. It's gotten a little easier. I've got two kids in college. They're doing really well. They both play football, so
Nice.
fall it's kind of crazy busy because I'm literally like got a kid that plays on Friday night and I got two on Saturday and I can't make it to both. So it's like a 6 a.m. flight on Saturday morning to a game and
That's
uh,
fantastic. I love college football. My
it,
favorite. Yes,
you're
of
right.
course.
It's
Growing up in Texas, it's a religion for us, as you
Friday
know.
Night Lights, baby.
Yes, yes, absolutely. Okay, that's awesome that you do that. All right, so before we end off today, first of all, thank you very much for what you're doing. I think it's awesome. I think it's badly needed. I do hope you get that education out in the market and you meet your targets because this is very important to our capital market. So thank you for what you're doing.
Thank you, KJ. It was great to be
Yeah.
with you.
Second of all, and last of all, what is food for thought you'd like to leave our audience with?
Think about every day when you wake up, what is it you can do to make the world a better place? And focus on what you're most grateful for and how you can spread that. And I think that is the secret to happiness. When I'm online, I see everybody try to promising recipes and secrets to happiness. And I think serving others and being grateful for what you have are the best and most direct way to find happiness. And if you can get your mind around that every morning, that's just going to make the rest of your days better. And you can compound that over time. You're going to be in great shape. You're going to be a very happy and productive person.
Mic drop moment.
Thank you.
That's a wrap, everyone. If you learned something today, I know you did. Go tell someone about this podcast. Thanks for listening to Disruption Interruption, where we transform lives, change consumer behavior, alter economics, and we never accept the status quo. Ciao for now.